Welcome back, everyone. I'm going to do a quickie today on what's going to happen with the federal funds rate. So let's get started. Let me minimize myself. Okay, according to Market Watch, the Fed funds rate announcement will be at 2 o'clock Eastern Standard Time on Wednesday, December 14th. So what's going to happen? Well, call me overconfident, but I've been able to figure out every one of these, so I'm going to try and figure out the next one. I think that the Fed rates are going to go up 50 basis points. Now, I said 75 basis points 4 times in a row. Now, I think it's going to go up 50 basis points and then 25, and then they're going to hold it. So I'm telling you now, way early, so you can prepare. And if you look at the CME this shows you the probabilities of Fed rate hikes. Over here on the bottom right, the 25%, that's for a 75 basis point rate hike. But on the left side here, the 75%, basically the 75% probability is for a 50 basis point rate hike. So I've got the gambling markets on my side. And what's the dot plot looking at? Here, there's some confusion. Well, not confusion, differences. A lot of people are looking for what's called a terminal rate of over 5.5% or at least 5.25%. I am not looking for that. According to the dot plot, and this is from September 2022, this is from a few months ago, according to that dot plot, and you can look at the bottom here, blue dots indicate the median projection. It looks like the terminal rate is going to be about up to 4.75%, maybe 4.7%. So I don't think it's going to be the 5.5% a lot of people are saying, or even maybe 5.25%. I think it's going to be maybe 5.75% or lower. Why do I say that? Because everyone and their mother, I always like to say that, everyone's looking for a soft landing. I am still not looking for a soft landing. I think because of a few things, but I'm just going to focus on one thing. Because of inventories being so high, based on bottlenecks. Some of those are from COVID-19 and some are not. But nonetheless, because inventories are so high, I think they're going to come tumbling down. They already are. And that's going to cause the economy to slow down at a much more rapid pace than people are thinking. So why are people saying it's going to be a soft landing? Why? Because it's very natural. Think about it. When anything slows down, like if you're driving a car and you're doing 100 miles an hour, you're not going to go from 100 to 0. You slow down. That's how it happens when you press on the brake, right? Even if there's emergency braking, you don't go from 100 to 0. The same thing with economy, and people thinking in that way, that they're seeing the data come in slower. Of course the data is going to come in slower. The data is not going to go from being 100 miles per hour, like really, really fast GDP growth, to really slow and negative GDP growth. It doesn't work that way. So, I think in terms of how it's going to be shown to the public. In other words, the hard data that comes in, even soft data, is not going to come in as a hard landing. But I'm telling you, because of inventories, we are going to get a hard landing. Now, how confident am I? I'm fairly confident, but I am not as confident as I have been with the rate increases in the Fed funds. There I've been much more confident of when they're going up and how they're going up. And I've been much more confident about the stock market. I think the stock market is having a short-term rally until we hit the 200-day moving line and the Fibonacci's and the Bollinger Bands and all that. We're basically hitting resistance soon. I think it's around 4,100 on the S&P. So maybe we can go to 4,200, but no higher. Then I think we can go down rapidly as earnings estimates get cut. We haven't seen cuts in earnings estimates yet. So I feel more confident about that, and even crypto, that Bitcoin can go lower and crypto can go lower with the stock market. I feel a little less confident about the hard landing, but I still feel like, 50 to 70% confident that we're going to have a pretty intense recession. But not as bad as 2020 because the government basically shut down the economy. So we're not going to get that type of recession. We're going to get a typical recession where you have a bear market, meaning, a few quarters, at least 2 quarters of recession. And I'm not counting the 2 negative quarters that we had early in the year as a recession. To me, that was a technical recession. That wasn't really a recession because we have too many jobs. Unemployment rate is very low, which leads me to my next point. The inflation rate is high at 7.7%, and it's going to be coming out at, the consensus is saying it's going to be 7.3%. Look at the date. The inflation rate is going to be coming out when the Fed makes its announcement. And many people are saying if this inflation rate is high, it's going to affect the Fed funds rate. And they're also saying if this inflation rate is low, it's going to affect the Fed's fund rate. I disagree with everyone about this. I think no matter what this inflation rate is, it's not going to change what the Fed funds rate is going to be raised by. Because as you know or should know, Powell and the Federal Reserve likes to look at all the data holistically, and they have a wait and see approach. Now, speaking of what I said earlier about my next point, I meant to say this. I want to show you this. This is the United States unemployment rate. And if you see here, it's at 3.7%, I believe. And the forecast is for 3.8%. It is way too low, my friends. This rate needs to practically double in order for the Federal Reserve to be happy that inflation's going down. Because remember, inflation is too stubborn, and this is a services economy. And the services economy is very affected by people, by labor, and the services ISM index is high, and wage growth has been high. Remember, wage growth is very sticky. So it's going to be very tough for the Fed to say, oh, we're not going to raise rates anymore, and we're going to pivot. The market's going to think it's going to pivot, and the market's going to think, and all the talking heads are going to think that there's going to be a soft landing. But I don't think so. The Federal Reserve needs a hard landing in order for it to accomplish its main goal of lower inflation. Well, I hope you all found this helpful, and I look forward to hearing from you in the comments below. And don't forget to like us. Bye-bye.